Hello everyone, welcome to the Monkey Market Model Indicator Walkthrough. In this video, we'll be going over the Monkey Market Model Indicator settings. This indicator is exclusively available to our Inner Circle Monkey VIP members in our Discord. Later on in the video, I can show you some alternative indicators that won't give you as convenience as having everything all wrapped up in one, and also can be a problem. These alternative indicators can be a problem if you have a free TradingView account, because you may need about 5 of them to even compare to the Monkey Market Model Indicator. So getting started, once you have it on your chart, when I click on settings, and we have a lot of stuff on here that we need to unpack, but it looks daunting, but it's really not a lot. So up here we have our sessions, starting off with the Asia session, then going into the London session. And this is one of those unique things inside this model. There's this New York AM opening hour. It will map out the high and low of that hour as a liquidity reference for whenever the true New York AM open starts. So we have this pre-hour here. We have this New York AM start opening and then closing at lunch. Then we have New York PM, or I'm sorry, not lunch, but the noon session. We have the New York PM session that ends the day. These settings right here, you highlight them. You want the top line or the bottom line, the liquidity of the session range to show. You can have it extend. Right, you can show the median or the mean of the range, the 50% of the range. I usually have that off. Then you can label your kill zones. For the purposes of this, we'll keep it labeled. Display kill zones up to the 15-minute time frame. We can do the opening price of whatever day that we want. And it'll separate the days. Want to include the labels. This, you don't really have to mess with any of this stuff right here. We'll move down into one of the unique core things of the Monkey Market model are these custom macro times right here. These macro times are a combination of ICT macros and micro day quarterly theory quarters. So what I mean by that is we have our, let's see, let's get a visual. Day quarterly theory, and then we want, this is my favorite, macros indicator right here. Alright, so I'm just going to turn that off. Okay, so excuse me. So, alright, so the micro sessions are the quarters of the 90-minute cycles. Okay, so when we go over, see, let's do an example of New York AM. It's better. can really see what I'm talking about here. Alright, so here we are. So this is D3, right? This is the distribution phase, right? And that's why it's D. But what the 3 is the combination of the second quarter manipulation phase and the third quarter distribution phase and the macro times overlapping those two phases. So it'll start at the macro time, include the second quarter and third quarter, and end at the second macro time afterwards. So in this case, New York AM, we have our macro right here, 920 to 940, right? It starts in the accumulation phase, but we just for consistency, it'll start at the macro time. So when we look in here, right, if you know anything about macros, especially this one, or even better, our favorite 945 to 1015 macro is within the D3. Turn these macros off. It's within D3. So that's the significance of these special macros. They're pretty advanced. They're actually pretty goated. Especially D3 all the time. Like, this is if you only wanted to trade one time a day, you know, this is that trading window right there. So yeah, this is what all these are. These are throughout the day. So we start at A2. I don't include the first manipulation phase because it's in the accumulation. Well, honestly, it's because it's too early for me. When I coded it, I didn't want to trade anything early around the new week opening gap. I mean, you can. You know, it's just as simple as taking a vertical line, starting at the macro, just 1820, then cover 1, and then, or cover quarter 2, macro quarter 3, then end at 1915, and this is your window right here. So I don't really like trading here, but you can if you want to, and that's how you would do it without having the monkey market model indicator. But I'll go over alternatives later on. Okay, so that's what these super macros are. And going over here, you can plot the new week opening gaps, the new day opening gaps, yeah, these are just options. You can have this event horizon right here. It shows you the daily open right here, the midnight open. Okay, so see, also it's a bit redundant. You don't really need that one on there. Okay, so here we have key levels here, like our daily open, or midnight open, the settlement hour, or settlement time, sorry, 7:30 open, 8:30 open, and then 9:30, 10, and afternoon. So what those look like, come over to New York AM. I'm gonna turn this off. Come over to New York AM. We will see. Oh, this. Let's run a quick view. So start at D3. We already see we have midnight open, the 7:30 open, the daily open here. As we progress through the video, we'll highlight the overall framework of how we take our trades, and we'll always want to target the midnight open or daily open or a new week opening gap or new day opening gap after we sweep the previous session's liquidity. Or just a major liquidity in general. But in this case, we would want to look for sells down here to take out the midnight or daily open, but we have this data wick up here, right? So ideally, you will want to wait for that to be taken out first. So now we have a sweep, right? Very strong sweep. It's coming over from this high way over there. Very strong sweep. And now it's ideal to look for a short setup. We have this liquidity line up here too. It's from, let's go ahead and go back. From up here. Here we are. See, and this is the cool thing about the kill zones enabling the high and low range, because it will extend those liquidity levels out into the future. So even if you're way over here, it will plot those out for you. And so take note, we're in D3, right? We just took out major buy side liquidity, and so ideally we can look for shorts. It's still running up, but I'm not going to go over an entry, but just that once we take out major liquidity, we want to target the midnight open, right? So there it is, right? All right, so it's covering the key levels. There's just adding or modifying your horizontal lines to your, you can customize them however you want to. You can play around with them, see what you like. You can add custom times, like if you wanted the lunch hour opening time, you could put it in there, or whatever time that you want to. It's a custom times. This is our liquidity sweep area. These are the default settings. It will track liquidity minimum from 3 bars from the left. Okay, so and 1 bar to the right. So it's pretty immediate. Let's see. It will grade the liquidity sweeps. These are very strong. It's not to be taken with put all your chips in, right? As you can see, when it said very strong, right, all over here, it just means that it's hitting a major level of liquidity from so many bars back. You know, it's a major swing point that hasn't been touched right from, you know, all the way over there. Okay, so this is an extreme of example of a very strong. There's other very strong signals that will only be like, you know, 15 bars away, but it's still a sweep of an accumulation zone, right? So let's see, going back to the grading. Okay, so weak means like it's a sweep from like 3 bars away, right? Just pay attention, look at the context, you know. It's okay to take okay ones, strong ones, very strong. These are checked to get alerts, right? If you don't want to get alerts on them, you know, it's okay, you don't have to get alerts on them, but have these checked if you want alerts on them. Here's our Heiken Ashi candle. That is our candle that looks is overlaying the regular candlestick. So if we turn it off, that's what it looks like. Just to be clean, I'm going to turn off all these macros. I'm not really looking at them right now. We will later on. Okay. We can turn off the Heiken Ashi candle right here in the Styles tab. The importance of the Heiken Ashi candle. It's another price action entry. You can get really close to the beginning of a reversal. What it does is it smooths out price action. It takes the average of the open, high, low, and close and like divides it by something. I don't know the exact equation on top of my head. I have it down in a document somewhere, but if you want, you can always just Google up what Heiken Ashi. But what's different about these Heiken Ashis is that the closing price is the actual closing price and not the average closing price that the original Heiken Ashi or traditional Heiken Ashi will plot for you. So if we click on the Heiken Ashi candle up here, you'll see what I mean. Yeah, sure, we'll go off. Okay, so you see like if price is jagging up and down or whatever, the Heiken Ashi will smooth it, you know, to tell you if it's going in a, you know, trending down or if it's trending up. The problem with traditional Heiken Ashi candles is that the candle will not close at the actual price. So like the candle could possibly close right here, but price will be like up here or something, right? Or even down here. So it's the closing price of the traditional Heiken Ashi candles is not reliable for a quick price action. However, this modified Heiken Ashi candle that is included in the monkey market model gives you the closing price. So how you would use it is, you know, let's say you're in a kill zone, right? And let's see, let's do this proper. Okay, so it would be 3 o'clock for London kill zone, but we will start at the macro. we'll just do the macro. Right. Okay. So the way you would use it, it's not really a good example because I wouldn't recommend that. In tree, let's see if I can get a cleaner one. I mean, that's not one. Let's look at an Asia session. Uh, 20, yeah, Oko, 1950. Right here. Okay, and 2015. Here's our macro. Make sure this is. There we go. Alright. So the way you would use this is you would wait for a sweep, a shark fin, and the first opposite Heikin Ashi candle without a wick, which would be this guy right here. And you would place your stop loss ideally at the previous candle's wick, but a lot of times if the previous candle's wick is close to the previous swing high, you want to place it at the previous swing high and, you know, target, you know, your first TP for me is 1 to 2, and then market structure right there, just that data wick low. So, you know, does it reach there? Don't know, but that's why it doesn't reach there. But that's why you always have a take profit level 1. But that wasn't the purpose of this, right? It was just to show how to use the Heikin Ashi candle. You want to use the first candle without a wick. Then you place your stop at the high of the previous wick. In this case, in the sell, you want to place at the high of the previous wick or at the near swing high right there. Okay, that is the Heikin Ashi candle. Now the Kaijun cross. Okay, so that's what this moving average is right here. Let's delete everything. Kaijun cross is another entry method like the Heikin Ashi candle. Included in the monkey market model, there's also IFEGs and BPRs. Whenever they form, they'll automatically pop up and you'll see them. It'll be a shaded box right there. So included in the monkey market model, you have 3 different types of entries. You have the Heikin Ashi candle, you have the Kaijun crossover, and you have IFEGs. Then you could take whichever ones you want. They're all included in here. So about the Kaijun cross, it's part of the Ichimoku cloud. I don't know if you've ever heard of that. You can Google it. But long story short, it is a projected moving average, and it smooths out price. So we're actually let's go ahead and Kaijun Sen line. Shows the midpoint of price for the last 26 periods. But this is different. We have ours at a custom length that I believe is 13. Yes. The default is 13. You can experiment and change it around, but 13 is what's optimized for the monkey market model. You can change the color if you want. If you go over to styles, you can change the style. Like I keep it as a step line, but you can put it as a regular line. I keep it as step line because the crossovers are more clean because it's a horizontal line, so it's either above it or below it, you know. So let's see what else we got. We have the divergence. These show up whenever there is a discrepancy between price and momentum. So in this case, we have our TDI shark fin down here. It's making a lower high, so the momentum is going down. It's going down, but we look here and price is going up. So that means that there's a discrepancy or a divergence between price and momentum. And so these, you can say they're SMTs, but they're called divergences in referencing to the TDI shark fin in RSI. We have what else we got here? Okay, so I'll go over the Kaijun cross. I'm sure everyone knows what an IFEG and a BPR is. If not, hit me up in the Discord. Alright, so let's go over the Kaijun Zen line, and then we'll go over we briefly went over the 1 minute, how to trade the 1 minute. After this, we'll go over how to trade the main 5-minute entry. Alright, so the Kaijun line. It's basically, moving average, and if price is above it, we're trending up. If price is below, we're trending down, right? The way that we use it is a crossover. We wait for time, liquidity sweep, shark fin, and then a crossover. That's it. It's just a confluence line. We wait for everything else prior to line up, and then we wait for the crossover. Within proper context, it can't be a crossover all the way down in discount or something, or a cross under all the way down in discount, or a crossover in premium. Right, so that's what the Kaijun line is. So now for the 5-minute entry, it does not require the Heikin Ashi candles. Okay, and actually I would prefer to have them off. You can choose however you want. I like to have I turn the bar colors on and off. You can see if the bar colors are off, you're able to see like order blocks, but if the bar color is on, you're unable to see them. You kind of have to like guess, but we don't want to guess, right? So we'll turn the bar color off and see our order block plotted, and then we turn it on. The benefit of having the color on is that it will tell you whether we are above or below the moving average. Let's turn these divergences off. Okay. So we're going to go over the 5-minute entry here, the session liquidity sweep. Alright, step 1. Time, right? But even more so, we'll say, New York AM. Okay. Step 2, previous session liquidity sweep, and this is either a external range liquidity sweep or a internal range liquidity sweep into an imbalance. Okay, step 2. So let's go ahead and do this. Step 1. Okay. Step 2. Okay. Step 3. We want our shark fin. Step 4. Gaijin cross. That's it. The hardest part about this is knowing whether it's a continuation or a reversal, and I will show you how to be able to determine whether it's a continuation or a reversal. Alright, so step 1. New York AM. Let's go ahead and do a bar replay. Okay, let's take note of where all of our liquidity is. So we have New York or midnight open up here. Okay, so for me, obviously, I'm thinking we're gonna run up. Right, we have London highs up here with these relatively equal highs. We have the midnight open right here, you know, and we're right in the middle of the range of London, you know, but we'll also look at what London did. We took out both sides of liquidity of Asia session. So if the last thing that we did was take out the Asia low, right, into all this imbalance over here. You see this over here? Swept into that, right? Then we proceeded to go up. Okay, so we just crossed this new day opening gap. Have still midnight open right here in London highs. So I'm looking, you know, for a short sell. Oh, but we look at this. We just swept lows. Right? We got a shark fin. Now, by the book, we would not take this long. We have things set in place here, like we have our sweep, we have our SSI liquidity sweep, right? We have a shark fin, right? We have a got that. We have a draw on liquidity at the top to justify the trade. DOL above to justify trade direction, at least for a little bit, right? Right, and we have a candle that closed up above the Gaijin. It didn't cross over though. See, this is why I wouldn't take it. well, one of the reasons why I wouldn't take it. Candle close above Kaiju. Okay, so let's just see what happens. Ideally, we want to see buy-side liquidity taken, but just for experimenting, we'll see what this does. You know, you see we have this blue box right here. That is our BPR. So it was a IFEG, a bear IFEG right here. See, it's red. Right. But we didn't sweep any major. This would be, don't do that. Especially if it does this, it wicks down in there and already takes out your low-hanging fruit target. The liquidity has already been taken, so there's no reason for it to go down there. Plus, you know, if you have an obvious draw, a strong draw liquidity nearby, don't take the opposite signal that happens before. I mean, you can, but you know, you want high probability, and so you want the price action to exhaust itself whenever it reaches its destination. Like, it's not going to do anything that you want it to until it's done going and doing whatever it wants to do. So just wait for it to go where it's going, and then you look for it. It's just my rambling. Alright, so we see that an IFEG will form, and when it gets rebalanced or inverted again, it'll change color again. So there's our BPR. That would be a confirmation that, you know, that we're running up, but that's not our textbook rule entry. Right, okay. Still no shark fin. Still no sell shark fin. So even though it looks enticing, you gotta have a shark fin. Right, there's some cases where there'll be a divergence and momentum is going down, and by the time the signal happens, there won't be a shark fin. But this is not a smooth trend up. We took out liquidity right here. So we would need a shark fin up here after we had already taken out sell side and produced a buying shark fin down here. Now, to counter that, we would need a sell shark fin up here. Nothing's happened. Momentum is still within its volatility range. We just got another entry, or re-entry if you were to take this one. But no major liquidity has been taken, for one, and two, this retracement did not tap into a fair value gap. Right, and there's no crossover, so we would not take this. This would not be within the rules of taking the trade. No matter if and even it's playing out, it's not. Okay, so boom, still no shark fin. Right, we got a divergence, we got everything else except the shark fin. So you don't take it. Alright, so we swept London high, but we didn't get a shark fin. So what do we do in this case? I'll tell you what you do in this case. You forgo it. You wait for it to not do anything weird. You know what I mean? Like, there's no shark fin up here, and you're tempted to be like, oh, is this a sell? Should I go ahead and take it? We already took London High, and blah. We got all this. We swept, and now we're below the kaiju line. There's even an IFEG over here. Yeah, all that, but no shark fin. You know what I'm saying? So let's just see what happens. Yeah, you're feeling good. Oh yeah, we're going down, but you know, at this point, I'm now looking for this to get swept. For this to get swept. Why? Because when we swept this previous hour low, we didn't sweep into an order block, nor did we sweep into a fair value gap. See? This wick right here, we mitigated this order block, but we didn't rebalance any price inside of here. I mean, maybe on a lower time frame, but as we see right here, it's not a clean setup. There's no fair value gap to retrace into. There's no order block to bounce off of. Heck, this low is a bullish candle. So all this price action going up, you just take note that it's not normal. It looks what is that word? Artificial? Yeah, so we're looking at price, we're thinking this was a sell, but you know, it's not. So the next thing we're looking for is a sweep of major sell side liquidity, right? So price is just going, doing its thing. You may ask me, didn't we sweep low right here and cross up here? My answer would be yes. But look how high we are in the range. And not only that, but we already engineered liquidity right here. So my advice would be to never take an entry after an engineered liquidity has happened, especially if it's all the way up here. When you take an entry, you want it to be near the swing point. You don't want it past the 50% of the range. Like if it made a breaker block, that's a different thing, but it's not making a breaker block. Like if anything, this would be what we want to see to be closed over, and it didn't happen, right? So you don't take that. Don't take it. It's one of those things you gotta filter out. For sure, the Discord, I know everyone's gonna have questions. Please ask them, right? Let's see. So you wouldn't take that one. I'm just gonna put my chart the way that I want it because there's a bunch of stuff on here. These prices. I don't really. That's fine. Alright, so we're still just waiting. Right? This yeah, so we're just waiting for either this buy side liquidity to be swept or this sell side liquidity to be swept. Doesn't matter if it wicks down in here because there's all this will be doing is taking out the buyers that are trapped in this funky price action right here. There's no order block to add any type of support to go up higher either, or fair value gap. Like this has already been taken right here, and then that order block has been mitigated. So it doesn't look good for longs, really. It looks like they're trying to chop people out. So just staying focused. You'd only want to see buy side or sell side taken out. At this point, we've reached into New York PM session. The beauty of the monkey market model is that if those days where the New York AM is just, doesn't provide a signal, you can wait for the New York PM session. So what we're looking for is a sweep of major high, preferably the New York AM high. I mean, that's what we're looking for, a sweep of the New York AM high. And then a sell down. Unless we get a sweep of these lows first, then we'll target up towards the midnight or daily. But whichever one happens first, we want to target the midnight or daily open. So nothing. You could have said this could have been an entry off of this order block right here. But that's not what we're looking for. We're looking for a sweep of major liquidity. Okay, so let's not forget that there's also this high right here too. Okay, so alright, and this one's saying that we swept. Alright, we got ourselves shark fin action going on over here. Okay, we just closed below. Right, so let's see what we got here. Now we have buy side liquidity sweep of our shark fin below. We'll say, what is it? The midnight open. Also have daily open and the new, well, not new day opening gap, but we just said the daily open right there. Right, that's, here we go. We candle close below Kanju. Right, all this for a sell setup. Okay, and this is where the bar color comes in handy. See how it changed from blue to red? Because we closed below this candle, or the Kaijun line. And our stop loss would be swing, but if you, I mean, they're close to each other, so I would put it at this right here. And target 1 to 2 for TP1. You know, daily open right there. That's cool. See what happens. Voila. Okay, that's the 5-minute entry right there. Let's do another quick example It's in the New York AM. Here's a good example of an OTE. Alright, so let's take a look at what we got going on over here. Zoom out, we're inside this huge new week opening gap. And we're inside a new day opening gap from the current one. So this is the huge new week opening gap that we just rebalanced, right? So New York open. Yeah, let me go back a little bit more. Alright, so we know that we're in a New York opening gap, or a new week opening gap right here. Right, but for me, it's just too much going on, so what I'll do, since I already know it's there, I'll come down here and turn it off. I like my charts clean. Alright, so let's take note here. We want the previous session's liquidity to be swept before we look for an entry, right? It's either a retest of an order block to continue to another session's liquidity, or it's a sweep of an external range liquidity of a session into, wherever, right? So it's either OTE or a reversal. So we're looking here. It's the New York AM right now. Alright. So we obviously have a draw up here. Have the daily open. Have this new day opening gap here. We have Asia high up here. And this beautiful inefficiency right here. Clear draw on liquidity. We can even refine it to this inverse fair value gap right there. Okay. There's our target. Now, whatever presents itself first, you want to take. So we have this clear target, right? We can either think, okay, we want price to sweep up high and hit here, right? And then reverse down. But if we're looking, London already took out Asia session low and it's starting to reverse. We're already rebalanced this fair value gap right here. And we still have this imbalance right here. So one of the key things about the previous session liquidity framework is if London takes out Asia's high, right, and then you want to target Asia's low. If London takes out Asia's low, then you want to target Asia's high, right? And it's the same for New York session. If New York AM takes out Asia's high, then or London's high, then you want to target Asia's low. If New York AM takes out London's low, then you want to target Asia's high. Or it could be the previous day's New York PM high or low or whatever. I hope you get the idea. You just want to target the opposite level of liquidity, but it is mainly always going to be the opposite end of the Asia range if it hasn't already been taken yet. It's not always the case. I correct myself, but that's what you normally want to aim for whenever you're taking that setup. Okay, so we're looking here. We have our clear drawn liquidity, so we can think, if a setup presents itself towards this high here, then we can take it. We have our daily hope in here, so let's just see what happens. Alright, so we swept the previous hour's high. Alright, yeah, it's still going. Okay, so this is what we got here. We swept into this fair value gap. Okay, so this would look like a sell signal, right? You want to measure how much your stop loss will be. You don't want it more. See, like it's 400 ticks there. Like, don't take that. Yeah. If it's more than, honestly, if it's more than like 250, don't take it. There's some that are like, use your discretion, but you don't want to stop loss this 400 ticks, right? That's the whole range, basically, from that, and it picked up there, creating this liquidity right there. That's a trap. You don't want to take that. So since that setup presented itself in such a funky way like this, I would think that, okay, so maybe we're going to get some sell side swept, right, and a proper price action entry towards the Asia highs, right? And we'll also look further, we have this imbalance up here too. So now I'm looking, alright, well, maybe we're going to get a buy setup. Whichever proper one happens first. Swept low. Seems like it's a very strong sweep. And we just crossed up above the Kaijun. Right? That would be an entry. And we've got this wick that we can run up. Whatever. See that. Generally speaking, this is the low, so that's where we'll put it. Okay. Alright, so we have a drawn liquidity up here. Okay, it's right around our 2R standard. We have Asia high too. So we just swept. We're in New York AM. Everything lines up. Price action looks pretty clean. DP hit. Alright, so that's a continuation. I feel like I rambled on a lot in that explanation, but it doesn't make any sense. Discord's always available. Alright, I believe that is it. This guide is a work in progress. This is not the final draft. Just getting it released out to you guys, so then you'll have a foundation to ask questions and go from there. All right, I hope to hear from you guys later on in the day. Later. Hello everyone. I'm going to give some alternative indicators you can use from the monkey market model indicator. Depending on what submodel that you're trading, either the SCQT 1 minute scalping model or you're using the 5 minute Kaijun crossover model. It depends on what you'll need. So to have everything for the 1 minute and 5 minute, you'll need the session liquidity tracker. This is Assam Julian. I'll provide links to all these indicators in the Discord, but this plots out previous day highs, lows, midnight open, liquidity levels, plots FEGs, the sessions, highs and lows, all that good stuff, right? Okay, the next one is ICT Hydra macros. The reason why I like this one a lot is because you can customize your own macro times. If you know me, you know that I like running the 45, the X45 to X15 instead of the last 10 minutes and the first 10 minutes. I like running the last 15 minutes and the first 15 minutes of the hour. And I have my mid-hour macros. So this just gives you a lot of boxes that you can put your different macro times in there. Of course, you got your 9:45, 10:15. So there's macros. It's called ICT Hydra macros. Again, I'll put a link down. Not down in the description, but I'll have it in the Discord. Next is the Kaijun Sen. It's by Erwin Beckers. You can just search up Kaijun and Kaijun Sen. Any one of them will work. Make sure it's on 13. That is the default. So we'll go here. 13. Okay. For the 5 minute entry, we don't really use the Heikin Ashi candle, but for the 1 minute chart, we do. This has a moving average with it. It's a smooth Heikin Ashi movement average. You can take that off, right, and just have the Kaijun line showing. And of course, we have our fair value gaps by LuxAlgo. Yep. Know what an inversion fair value gap is. So moving down, we have the Shark Hunter panel. It's available to our group members. And last but not least, we have the day quarterly theory. Now we have this because when we're trading the 1 minute model, we use it to know whether we're in the second quarter or third quarter, right? So we'll start at the start of the macro there, and then we end it at the end of this macro that overlaps Q3. And so we would look for a setup within this box. Obviously this is a news candle, 8:30. So let's see, let's say we wanted to take a Heikin Ashi or a 1 minute entry on Heikin Ashi, right? We can use the Kaiju Stand, but let's say we turned that off. After 8:30 sweep flows, right? We swept London's low. So we swept major buy side liquidity. And for the Heikin Ashi, we look for the first candle without a wick, right? So generally you'll want to put it at the previous candle's low. Oh, wait a second. Okay. So for the Heikin Ashi candles, if the close is above the close of the Heikin Ashi candle shaded area, you don't take it. Because what's that, like a doji or something? Yeah. And it's a bearish doji, so your entry would really be like right there. But you want the closing price. If it's bullish, you want the closing price to be, right here, right? And you want the opening down here. So you wouldn't take that one. You would actually take this one. See what I'm saying? The closing price is at the top and the opening price is right there for a bullish candle. And so we can put our stop either right there, right, or previous swing low right there, and you target the 2, the opposite liquidity level, which would be this high right here. So yeah, kind of rambled, got off tangent there, but that's our Heikin Ashi candle actual close, and how to use the day quarterly theory mixed in with the Hydra macro. So yeah, I'll put links to all of these 7 indicators down in the Discord. Alright, later.